It's Thursday, the 6th of November, 2025. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's go. Story number 1, the local share market fell to a 6-week low yesterday as Wall Street's tech titans tumbled and other asset classes, including Bitcoin and gold, dropped as investors get a little bit nervous about high valuations.
Wasn't what you call a bloodbath, but there was really selling everywhere on the back of a fairly disparate bunch of events. Looking locally, first mining stocks pushed the local share market to a 6-week low yesterday. There are media reports out of the development of an iron ore reserve in Guinea that would certainly hurt the local miners. Local tech stocks were also sold off following a sell down of Wall Street mega caps amid renewed concerns about valuations. So an index of the magnificent tech stocks, Nvidia, Microsoft, Apple, Meta, Amazon, Alphabet and Tesla, fell about 2%. The prospect of no more rate cuts in Australia following the Reserve Bank Board's meeting on Monday and Tuesday also weighed on equities. Now, during the day yesterday, the market fell by as much as 0.5%, pared back those losses, closed down slightly to 8,802 points. Many investment analysts have warned of a bumpy end of the year. What's emerging is just a higher aversion to risk. There are concerns over tech company valuations and receding expectations of rate cuts both here and in the US.
What about Bitcoin, Sean? That fell below $100,000 a unit for the first time since June. Gold fell, oil fell as well.
Yeah, Bitcoin dropped to under $97,000 a market, came back a bit, but it was down about 20% from its peak of last month. Ethereum, the number 2 crypto, off about 36% since its peak. Markets are fickle, to say the least, but in recent days, just a sense. A little bit of overvaluing going on. Even gold, the ultimate safe haven's been caught up. It's down to $3,900 an ounce. Brent's down. A real sense of unease in financial markets at the moment.
All right, let's move on to story number 2. And the boss of the corporate regulator, Joe Longo, yesterday said that Australia's financial markets need to innovate or stagnate. And private credit in this country faces its own Minsky moment, suggesting that a market collapse is a real possibility.
Yes, a Minsky moment is the sudden collapse of the market following a period of speculative investing involving big amounts of debt. Think GFC. Longo said the private credit sector is still small, there's time to act, but he put it on notice to improve industry practices, otherwise face legislation. Longo was speaking at the National Press Club after the release of 4 research reports into public and private markets. He said Australia needs to consider when a company is public or private and the rules for each. He pondered why a biotech company with less than $10 million in turnover that's listed should have the same compliance as BHP and more than Sydney Airport, which is now a private company. Good questions.
Yeah, okay. Story number 3, Goodman Group has reported a solid September quarter, and the data centre and commercial property group said development activity is set to accelerate in the second half.
But boss Greg Goodman warned that it's getting harder to build data centres, notwithstanding all the tens of billions of dollars being thrown around. When asked about the big tech companies putting money into AI infrastructure, Goodman said there's not enough money in the world to finance the aspirations, and that's the reality. There needs to be a bit more common sense in building good long-term products. The group reported $12.4 billion of work in progress. More than 2/3 of that is in data centres, and that's growing. Goodman's share price was down yesterday. A few years back, Goodman was absolute star performer, hot stock. Steam's come out. Goodman is off 12% so far this year, one of the worst performing large caps. Of the top 50 stocks over the last 12 months, only WiseTech Global, James Hardie and CSL have done worse.
All right, story number 4. What's been described, Sean, as a judgment on the performance of Republican President Donald Trump. Polls in New York City, New Jersey and Virginia have all been won by Democrats, while a vote in California sided with the Democrats' proposal.
The highest profile was the mayoral election in New York City, where 34-year-old Zoran Mamdani, a Muslim who Donald Trump has been highly critical of, was voted the youngest mayor of the city in more than 100 years. More than 2 million voters cast a ballot, the highest turnout in the city since 1969. In California, voters agreed to a redistricting effort intended to partially neutralise a push by Trump to draw up more safe Republican seats before next year's midterm elections. And in New Jersey and Virginia, Democrat governors were elected. In the case of Virginia, the previous governor was a Republican, so Democrats made significant inroads across that state. There was also a vote in Pennsylvania where Democrats kept control of the state Supreme Court. Undoubtedly a bad day for Republicans. Donald Trump tweeted, of course, he said, I quote, Trump wasn't on the ballot, and shutdown were the two reasons that Republicans lost elections tonight.
All right. Story number 5, last one. I think this one's incredible, Sean. Scientists have uncovered structural heart problems by using an artificial intelligence tool to vet smartwatch data in the latest advance in the fast-evolving field of cardiology diagnostics.
The new technique found conditions included weakened pumping ability, damaged valves, and thickened muscle, promising to expand the potential of wearable devices beyond detecting rhythm disorders. The work uses simple readouts of heart electrical activity that can be recorded by smartwatches without the need for extra equipment, according to the FT. The preliminary study was unveiled at the American Heart Association's annual scientific sessions, and according to its authors, has the potential to transform structural heart disease screening in communities. It could make early screening for structural heart disease possible on a large scale, using devices many people already own. Smartwatch heart data is already used to spot warning signs for atrial fibrillation and irregular rhythm, but could do much more.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 6th of November, 2025. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.